It's Dr. Know-It-All. So guess what? We have press releases. This is quarter 4 2021, but this is quarter 4 2022 update from Tesla. And I just want to go through the highlights page here. Let me move myself out of the way up at the top. But yeah, let's take a quick look here. And I also wanted to compare that to 2021, which was here. So let me work my way back here. Where is it? Oh, that's not actually the correct press release. That would be why. Sorry, press release, download, investor deck. Yes, there we go. Sorry. Okay. Now we're in the correct place. Okay. So let's take a quick look here. Just as a quick reminder, this is the year 2021. So they had operating cash flow less CapEx of 2.8 billion in quarter 4, 1.5 billion increase. The big numbers here, of course, profitability, they had 2.6 billion GAAP operating income or 14.7% operating margin in Q4. And, you've got your non-GAAP income and et cetera, et cetera. So anyway, so let's go here to 2022. Now, let me make sure I've got this correct. I don't want to say the wrong things, but yeah, so here we have, remember that the other one was 14.7, and here we've got 16.8% operating margin in all of 2022 and 16.0% in Q4. So obviously their operating margins have gone up. $13.7 billion in GAAP operating income as opposed to 2.6 billion. Right. So, and I believe though that looks like that's quarter 4. Unfortunately, they do the kind of thing where they, it's not quite exactly the same each year. So it's a little bit, you have to kind of work your way through it. Anyway, but they do have automotive gross margin, but I noticed that they don't have that in the summary here anymore. So that is not listed immediately. So we'll have to look at what they do in their earnings report. But anyway, in general, this looks really, really good. It looks like they have significantly more, operating income that they've got. Obviously, they went from 0.94 million vehicles delivered to 1.31 million vehicles delivered. So again, that was about 40% increase rather than the projected compound annual growth rate of 50% that Tesla says that they want to do. But that's the way it works. And then let's see what they have to say here. Quarter 4 2022 was another record-breaking quarter. 2022 was another record-breaking year. In the last quarter, we achieved the highest ever quarterly revenue, operating income, and net income in our history. So still breaking records, regardless of what people are saying about demand and all sorts of margin collapse and things like that. Things look pretty good for Tesla. In 2022, total revenue grew 51% year over year to $81.5 billion of revenue. Wow. And net income or GAAP income more than doubled year over year to $12.6 billion. So if we look back at that other one, this would have been quarter 4 then. So we were looking at anyway, somewhere on the order of $6 or $7 billion in last year. So anyway, so they more than doubled to 12.5 billion. So that's really fantastic. As we progress into 2023, here's some guidance. We know that there are questions about the near-term impact of an uncertain macroeconomic environment, and in particular with rising interest rates. Elon Musk has made no bones about that fact. He's definitely always worried about rising interest rates. The Tesla team is used to challenges given the culture required to get the company to where it is today. In the near term, we are accelerating our cost reduction roadmap and driving towards higher production rates while staying focused on executing against the next phase of our roadmap. So really, really important cost reduction here, very, very important, and higher production rates, also very important. So remember, they're cutting prices. They're going to try to make more vehicles. By scaling it out, you can make them more cheaply. So all of these things, work together. And like I've said in many videos recently, Tesla's kind of the shark that's eating all the slower moving fish right now. So basically they're like, we'll reduce our profit margins. We don't care about that short term. What we care about is decreasing costs by making more vehicles and selling more vehicles to customers. So both of those things are really, really on the positive end of things. Okay, our ASPs have generally been on a downward trajectory for many years. That's average selling prices. Improving affordability is necessary to become a multi-million vehicle producer, very definitely. If you're charging $200,000 per vehicle, there's only so big of a market in the world that you can sell to. Whereas if your vehicles were $10,000, you could sell to a whole lot more people. So that's a pretty obvious thing. So obviously they want to try to drive this down as much as possible. While ASPs have halved between 2017 and 2022, our operating margin consistently improved from approximately negative 14% in 2017. Wow, it's hard to even remember those days anymore, right? When they were negative cash flow every quarter, to positive 17% in the same period. This margin expansion was achieved through introduction of lower cost models, build out of localized, more efficient factories, vehicle cost reduction, and operating leverage. So scale, do the right thing, build good factories. That's what's going to get you into the profit scenario. In any scenario, we are prepared for short-term uncertainty while being focused on the long-term potential of autonomy, electrification, and energy solutions. Our relentless cost control and cost innovation is why we believe that no other OEM is better equipped to navigate through 2023 and ultimately succeed in the long run than we are. And then, you can go on to financial stuff. But anyway, they're going to be doing their call in just a few minutes. I just wanted to pop this one out before they did it because I think this is awesome. And yeah, hopefully we will all get to watch the earnings call together and find out even more information. But this is all to the good. This is all very, very positive on Tesla's part. So I'm looking forward to the earnings call. In the meantime, everybody have a lovely evening. Bye-bye.